Welcome to the TriMetric Roadmap, powered by Business Freedom Advisors, the podcast for business owners who want to grow their business and enjoy their life. Hey, I'm your host, Scott Landis, creator of the TriMetric tracking system and author of Balancing Act. If you're tired of chasing success at the expense of your health, your marriage, or your peace of mind, you're in the right place. On this show, we help you track what really matters: business health, life quality, and leadership performance, all in one simple, powerful system. Because when those get out of sync, everything else starts to break down. Our goal here is to help you align it all so you can lead with clarity, scale with purpose, and finally enjoy the freedom you've been working so hard to create. And if it feels like no one's ever shown you how to pull that off, this podcast might just be the missing link you've been quietly searching for. Now, let's dive into today's episode. Welcome back to the TriMetric Roadmap Podcast, brought to you by Business Freedom Advisors. And I'm Scott Landis, and that's over there. That's Jeff Jacob, way over there. Last episode, we talked about the first freedom lever of the 5 freedom levers, and that one we call it keep it. Keep your money, making sure the business produces real profit and that you actually retain more than you earn. That was the last episode. Today, we're moving to the next freedom lever. We call it Know It, or AKA, it's about financial intelligence and command. And what we're talking about here is because a founder can have money in the bank, they can have a bank balance, they can be growing revenue, they can have a profitable business, and still not clearly know what is happening financially. Can you relate? You may now you may know what happened last month. You may know what your accountant tells you at tax time, but do you know what is likely to happen next? Do you know which part of the business is actually producing profit? Do you know where cash is getting tight before it becomes a problem? And do you have the numbers you need to make confident decisions every single day? That's the difference between simply receiving financial reports and having financial command. So the goal is not to turn every founder into a CFO. The goal is to give the founder enough visibility, clarity, and foresight to lead the business without flying blind or just running it by the gut. So, Jeff, let me start here with this question. What does a founder actually need to know about their numbers in order to feel like they are truly in command of the business?
That really is a hard one. And that is part of why I love this lever. It's probably my favorite one to be working in. And because it makes such a quick, immediate difference for people. And it's almost like art. It takes some figuring out of what numbers, what metrics are really going to make sense for every industry, every business owner, and their personality, their financial knowledge, everything. And so we try to personalize it for each one, but and the each company really needs to be focusing on something different. And so, for instance, we have a dashboard that we make for everyone that includes all of their financial reports, all of that, but it also has their specific goals on it too. And so they are constantly seeing where they are according to their goals. And so we have, for instance, one client that has a goal of increasing their top line revenue by 20% this year. And so it's constantly checking that and saying, are you on track? Are you not? All these. There's another client we have that is working on job profitability because he was just quoting jobs by his gut and then didn't have a way to actually look back on, are they profitable? How am I doing on these bids? Am I making money on them or not? I have more money in my account now than I did, so I think I am doing a good job, but he didn't really know. And so we have to be tracking that. And it's really different for everybody of what their biggest issues are, and then how do we track it, in addition to just all the regular numbers. One of the biggest things we do is that very few people actually know how to read financial reports. And so, therefore, one of the things we do is to organize the financial reports in a way that actually just makes sense for them. They don't have to know the ins and outs of financial reporting. And because most people run a report from QuickBooks, they see a list of all their expenses, a list of their income up top, and it is just a bunch of numbers to them. But what we do is we organize that in a way that you can see how much money am I spending on payroll? How much money am I spending on my facilities, my operational costs, my administrative expenses, different things like that. Again, it's different for every client. We personalize it to them. But when we end up taking over the books for people, which we do for a lot of clients, because our work gets a lot easier if we're actually controlling the books as well. But when we do that, we have to clean up a bunch of things so that there's actual clarity and in a way that will make sense for the business owner, because that person, he or she, is the first one that needs to see and have a good idea of what's actually happening. And all of this we talked about at our in more depth at our roundtable, our founder roundtable that we did this last week. And I think there's another one of those coming up too, where we actually get in a group with people and discuss some of these issues.
Yeah, just to highlight that point real quick, I'm so excited about our founder roundtable. We've been building towards it for months, and we finally just yesterday had our first one. So depending on when you're listening to that, that was July 1st when we did that. But we are planning to do it on a regular basis. The dates will be maybe once or twice a month. It's an exclusive group, but if you get registered and find us and get your seat there, you are in and no cost. And so you can easily find the registration page for the Founder Roundtable at getbfa.com. So simple URL, it'll direct you to whatever the most recent or the most the recent version of the Founder Roundtable. We might be changing the topics as we go, but financial intelligence and command is probably going to be a through line through the Founder Roundtable. So if this topic that we're talking about today resonates, or you think, gosh, I could use a little bit more financial command or command over my business from a financial intelligence perspective, definitely jump in at getbfa.com. And then we'll see you there, live and in person. We'll be there. All right, Jeff. So I want to come back to a couple of things you said that were interesting. And these are just common experiences. And I'm not the CFO of the fractional executive team. You are. So I kind of have this third party, lens where you are just like so in it. You probably just, it all comes natural to you, and you just think, oh, this is just normal stuff. But for a more novice mind, or somebody who's kind of an outsider from that CFO lens, I'm an entrepreneur, visionary, business owner, growing and scaling businesses. You said financial reports that make sense. So I just want to unpack that a little bit. Most of the people that we talk to, some of them don't, but most of them have something like QuickBooks Online or something where they're tracking a P&L. They usually have an accountant or CPA that maybe works on that with them, or at least they send that to them once a year. And they find out at tax time, oh, I'm doing pretty good, or oh shoot, didn't do so good, I better do better this year. And so like they're doing this once a year, and it's a completely look back. And you're like, you leave your CPA meeting, you're like, well, that sucks, or that's great, but it doesn't tell you anything about where you're headed. And also you look at your P&L maybe regularly, like the best performers usually are looking at their P&L regularly, but they're not really sure. And so when you say organize in a way that makes sense, I've seen it over and over again. When they see the way you organize it for the first time, they're like, oh my gosh, that makes sense. But for somebody that's listening who hasn't had that experience yet, maybe unpack that a little bit more. And then kind of on like layered in there is most of the people probably listening, they're like, I don't really trust those numbers anyways. Like they don't I'm always finding errors. I'm always like, sometimes for whatever reason, the bank balance and this QuickBooks balance aren't lining up. It's like always been like 23 cents off for the last 12 months, and I don't know what to do about it. And so I'm looking at my bank account and I'm saying, oh, I've got a threshold number. It's whether it's 20,000, 50,000, 150,000. When the bank balance goes below that, that's when I get, oh, my alarm bells go off. And if it's above that number, then I feel okay. And the P&L is like, I look at it, but yeah, it doesn't really make sense. And I don't really trust it. So what's going on with that? Because you see this all the time.
Yeah, I do. That's when it, okay, with when we get into the books, the first thing we look at is when it was reconciled last, because that is kind of, I mean, journal entries can mess it up, but that is kind of a statement of these have been looked at recently. Somebody's on track with this. And if it was the end of last month, then that's what we want to see. That's the first step of seeing that.
So that's
And
like an
how many?
indicator for you. It's like a clue.
Mhm.
If it hasn't been reconciled recently, then immediately you're like, okay, something's off. But if it has, then you say, oh, okay, maybe there's some good news here.
Right. We try to reconcile for all the books we do, we reconcile within the first week of that next month. And so if it's July 4th, then we will be working on reconciling June that right away.
By the way, let
Um,
me throw in the assumption is if you've got a bookkeeping or accounting firm handling your books, you're probably hearing this and you're like, oh yeah, I'm sure it's reconciled because I paid somebody for that. Of course it's reconciled. But even then, we see it over and over again where it's like, okay, that first clue gives you an indicator. Oh, the bookkeeper, how much are you paying him again? Because they haven't reconciled this for 6 months or more.
right. So, and yeah, we're getting into the weeds of bookkeeping here a bit, but the first thing I look at is when was the main account last reconciled, and which accounts have been reconciled? Have the asset accounts, have the liability accounts been reconciled? Because all of the accounts need to be reconciled. Otherwise, you can't trust your balance sheet. It has to be reconciled.
Okay,
That's
cool. Quick thing. So if you're listening, I want you to write that down. Like, take an action item here. Check to see if you've got a bookkeeper, if it's your next door neighbor who has a bookkeeping company and they're doing your books, just write this down. Have they reconciled? And then have they reconciled what was it again? The asset, say
all
that
of
again,
the
Jeff.
accounts, asset
Okay.
liability accounts. The asset accounts will include your bank accounts. um yeah, it's checking, all of them have to be reconciled. It's
Okay.
and
So if they say,
so
yeah,
few bookkeepers actually do that.
right. So if your next door neighbor bookkeeper, I'm just saying that because so many times we hear that. But if
Uh-huh.
they say, oh yeah, and you check and it's like, okay, good. That's a good, you got a green light, probably a good sign. But a lot of times we'll see that hasn't been done, and that should be a red flag for you. So just wanted to make that note for you as you're listening.
Yeah, you can go into your QuickBooks account, go to the accounting tab, go to reconcile, and then you can choose each account. It'll show you last reconciled, last statement end date, last reconciled on that date, and it'll show you.
Okay. And then
Um,
why is that so important? Like, why should we care?
so you can trust the reports that are actually coming out.
Okay.
And if, because that's the main thing. Yeah. So you can
Hmm.
trust those reports.
Cool.
Next, oh no. So yeah, when was it last done? And this, we had one client, for instance, that we weren't doing their books. We were working with their bookkeeper, and they were putting, they weren't doing everything right. And so the reconciling wasn't happening, and they weren't matching the transactions in a timely manner. And so we created this personalized dashboard for him that he could see everything for all his projects. And yet he still wasn't able to trust that because the bookkeeper wasn't entering anything. And so if it's pulling from QuickBooks, which is what everything does, or whatever other accounting software you have, um, if it's pulling from there, it's reliant on the bookkeeper actually doing their job and categorizing transactions. And so when we take over the books, for instance, there was another client, we ended up taking over their books. And we saw that we had to call every vendor and say, how how many, or give me a reconciliation of our bills, because there were bills that weren't in there. They were asking for payment for bills that we didn't, that hadn't been from the previous people put in. There were bills that we were trying to pay that had already been paid. So QuickBooks wasn't right in there. And this was, a firm that these people, this our client had been trusting to do all this stuff. But
Paying
it's
good money too.
wild, real good money. Yeah. And they it was terrible. And so we ended up having to clean all of that up, and then ended up getting there because they had $450,000 of accounts receivable. And so we implemented a system to, because we were able to see the truth of that and trust that number, we were able to implement a system that then inspired the people to pay their bills, the customers to pay their bills.
That's a great example of our TriMetric flywheel. It's truth,
Mhm.
alignment, and action. We do that all the time,
Mhm.
over and over again.
Mhm. And we've been in charge of their books for 2 or 3 months now, and they have cut that accounts receivable in half in that amount of time. And also their account,
Not too
because of,
shabby.
not too shabby. That's an extra $250,000 that they brought in that was just sitting out there from a long time ago. And then their accounts payable, the bills they owed, was up to about $256,000. And now, as of our meeting this week, it was $78,000. And so, because the reconciling was done, because the process was done correctly, we created another tool for them to track, okay, if there's a bill coming in that's a billable expense to a customer, has it been invoiced? Has the customer paid that invoice? And then when that happens, we pay that bill. So we created a tool for them to be able to track all of that correctly. QuickBooks isn't great at that. And so it's a manual process you have to go through with QuickBooks. It's really irritating. And then that means you can't set up just automatic systems that QuickBooks is built for. So we created our own tool for that. And because we were able to do that, the money was coming in to actually pay the bills. And because the accounts receivable was coming in, we had the money to actually pay off all that stuff. So therefore, their their financial position is in a vastly different place. But it started with having clarity of what the truth is of what's happening in the business, and then being able to then go and make actionable steps on that. Having a process to, okay, I have clarity, now we have strategy. Let's implement the strategy and evaluate as we go along.
Yeah, let me jump in there for just a second. If you're on a train of thought, don't forget where you're headed. But I want to just, because this is a little bit of a tangent side note, something we should cover on another episode. It's not this particular, well, I guess it does fit into Financial Intelligence Command, but I want to just throw in like something that I'm excited that you brought up. When you think about what is well, let me back up. What is the difference between a fractional CFO and or fractional anything, fractional CRO, fractional COOs, fractional whatever, CIO, whatever the fractional is, and what Business Freedom Advisors calls a fractional executive unit? You just touched on something that is so key to what we think is a differentiator of what Business Freedom Advisors is, and that's a fractional executive unit, which is it's basically you're getting an executive team that is thinking at the entire level of the executive, the C level. So Jeff, you just illustrated something that's more of a CRO lens. So when you think about a chief revenue officer, you might be thinking, what's the difference between a chief revenue officer and a chief sales officer or a chief marketing officer? Chief revenue officer is a lesser thought of, lesser discussed C-suite. And what is the CRO, the chief revenue officer, supposed to be looking at? And what I learned this myself. It's not just about sales and marketing. It's about revenue is in every aspect of the business. And if you have somebody who's looking at it from a CRO lens, which the fractional executive unit does always, you are looking at something that Jeff brought up. You're looking at something like receivables. Receivables are a 500,000 on this. Let's look at that. What can we do to impact the revenue there and start to cut that in half? Every aspect of revenue, from client interactions to we were just talking before we jumped on here today about customer surveys. It could be, so from the moment you're putting your marketing message out to the world, all the way through onboarding, customer satisfaction, customer retention, it's all touches revenue. So when you think about hiring some help, you want something that covers all of it. You want that CFO lens, you want the CRO lens, you want that fractional executive units, like a SWAT team that comes in and takes operational control from an executive level and helps you. So the financial intelligence command lever obviously touches a part of that. So I just wanted to, that was a big segment of tangent there, but something, I wanted to, you got me excited about that, because that's something a lot of our founders, a lot of people listening probably don't think about a lot.
Yeah, absolutely. And it's all about systems. And because if you're trying to get to the place where you're a true business owner and not just owning your job, but you actually own an asset, then you systems are the things that need to be implemented. And there's a lot of ways to do that. And there's a lot of different systems. And so many people get freaked out by the word systems. Everything's a system. It's where I store my pen is a system, but I don't define it and write it down. So, but everything's a system. So don't get freaked out by that word. But implementing and improving more correct, efficient systems, sometimes automated systems, are what helps a business to be able to get through to the next stage. And so, one of the great things that a CRO does is create those revenue systems that can be run and trusted to really move the needle with as little of financial investment as possible. And that's what we talk about with these financial systems as well, because it starts with when we run the books for people, we're matching, categorizing transactions every day, because I want our clients to be able to have immediate, clarity on where they stand financially and what's happening in the business. And so there's a client that their dashboard we created shows, their revenue, their expenses, for the year, but it gives you a snapshot of what's happening this month. It shows all the invoices that have been sent out, which ones have been paid, which ones are outstanding. And so they can see, and there's, summaries and then details. But the summary, they can just look at one picture and see, here's how many invoices are outstanding. Here's what we expect to be coming in. And we know payroll's coming up. We know taxes are coming up, these kinds of things. It can lay that out of where are these expenses projected to be. And so they can look at and have immediate everyday knowledge of here's where we stand, not just by the bank account, but a realistic number. You could have $100,000 in the bank account, but have a $150,000 tax bill coming up. That's not enough money. If you're just looking at the bank account, you're like, hey, I can, I'm in a good spot. But really, you're not. You're behind the eight ball there. And because there hasn't been the systems to be able to implement to be prepared for that.
Mm-hmm. Yeah. So with the time we have left, let's just touch on, we often look at transferable value. We look at valuation of a company, and definitely this lever touches on, having, clean, understandable, decision ready financials. That makes the business more bankable if you're looking for capital investment, more transferable, and more attractive to buyers. So just, what are your thoughts on why financial command increases business value, why it's so essential there?
Well, one of our clients, their goal is to get funding, and so that's their goal tile on their dashboard is all of the different metrics ratios that you are looking for funding. There, that's one that we're having to put extra work into because their bookkeeper hasn't been reconciling the liabilities. Therefore, they're off from the truth of the account balances. And so we have to put in extra work to clean that up to actually get them funded. And on every dashboard, every client we have, here's where the value of our business is. And with some clients or some customers of ours, we work with them for preparing for exit and for selling their business. Some of them we work with them to just increase cash flow and get to that next level. It really depends. But for every one of them, I want them to constantly see what is the value today of my company within this range. And so there's a low, medium, and high value there on every dashboard. And what was your question about that, though? What does that do?
Just wanted you to have, add your thoughts to that. I mean, just how this lever affects business value. So.
Yeah, and with business value, a big part of it is what kind of multiplier you're getting. And the more someone's able to buy a business and not have to work as much in it, not have to spend as many hours in it, the higher the multiple will be. It's like buying a house, and so the more work you have to put into it, the lower it is. The fixer upper, it's lesser value. And so and therefore what we do is help implement those systems, help implement the systems so that the business owner can really find that freedom to own an asset, not a job. And that raises also the business valuation, and they can get a higher multiple. And so if you're getting, let's say your company's bringing in $1 million, let's just use that as the metric. $1 million, you're going to get a multiple of 3. That's a $3 million asset. If you're getting a multiple of 8, that's an $8 million asset. That's a $5 million difference, and it doesn't take what most people think it does to be able to raise that multiple. You're basically, you're implementing systems and making sure that the books and everything are in place. The systems are viewable enough so that the curb appeal, so to speak, of the business is there. And that raises the multiple. And that's why I love doing what we're doing. It makes an incredible difference. That's without even raising the profit of the company. You get $5 million extra because of just implementing systems. And that can happen fairly quickly, depending on the industry.
Yeah. Well, so the big takeaway from today's episode is this: you cannot lead a business with confidence if you don't trust the numbers. So the know it lever is about turning financial data into real command, knowing where your cash is going, what is driving the profit, and what's likely to happen next, and what decisions need to be made now. So you don't have to be a CFO, but you do need clear numbers. You need the right kind of dashboard. You need a consistent rhythm for reviewing the health of the business. So, because when you know the numbers, you can make better decisions and avoid surprises and build a business that is more profitable, more bankable, and more valuable. So next week, we will move to the next freedom lever we call Run It, which is operational infrastructure and intelligent systems. You can see how these are all kind of connected. We're going to be talking about the systems, accountability, and leadership structure required to get the business running with less dependence on you. So another thing we cover in our founder roundtable is what would you need to do in your business to be able to take 30 days and not even have to worry about your business. That's what the less dependence on you looks like. Jeff, thanks again. And for all you listening, we'll see you again next week. Thanks for listening to the TriMetric Roadmap powered by Business Freedom Advisors. I've been your host, Scott Landis. If you're growing a business but something still feels off, you're not alone. That's exactly why we created the TriMetric quiz. It's not a personality test, it's a powerful diagnostic tool that shows you where you're in alignment and where things may be silently slipping off track across your business, life, and leadership. It only takes a few minutes, and the clarity you'll gain is a game changer. Go to TriMetricQuiz.com to take the quiz now before the cost of staying stuck gets any higher. Until next time, stay focused, stay aligned, and keep building a business that truly supports your life.